Hey, good morning, traders. Quick emergency update here. Our CME gap has been filled. Remember, I alluded to that yesterday on our rather lengthy video. By the way, TradingView people, what happened is I went on a stream for the first time. I made it private because I was sort of testing it, but this is so I could skirt that 20-minute barrier. I knew the video was going to be a little bit longer, and my hopes was that after the fact that I could turn that stream from private to public. Didn't happen. There was no option to do that, so I just put it in the description of my last post if you want to watch that video, and if you're not on any other of my social media channels, which you should be, especially my website. You'll get everything there. So not only has our CME gap been filled on Bitcoin, I'm going to jump to that chart in just a second. But speaking of the descending frickin' wedges, we have a user on Instagram, Yo That's B, reminded me of the mother of all wedges, which I slipped my mind yesterday. I had it mapped out, or I was going to map it out for you, and I ended up distracted on all the altcoins. But anyways, thank you, Yo That's B on Instagram, for reminding me of this. Let's jump to the charts, and I'm going to show you what we're looking at and what this potentially means. Okay, so first of all, I want you all to draw this wedge out on your charts. This is important because these descending wedges, as I said, they are currently in this time frame of the crypto space, the primary indicator or pattern that I'm looking at to catch those pops, to catch those altcoin breakouts. All right, these are breakout patterns. And we have here on the daily, okay, get your triangle out and draw this. Try to touch the top of those bodies here in April through May, all right? When we moved up to almost touch our, actually we did touch our 200-day moving average, all right? And I'm going to bring this line actually all the way down to my support at 24,000, all right? That's pretty good. Doesn't have to be perfect. All right, that's the point of our descending wedge. Now I'm going to go back and touch our body lows in May of this year, early May. All right, then we had some bodies over here in January. Remember that big fall? All right, we hit our ascending black line in the sand. And look at this. Perfect, 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 perfect. All the way back to September of 2021. Look at that descending wedge, guys. How perfect is that? I mean, you can adjust it a little bit if you want. I can move this down. Anyways, it doesn't have to be exact. You have touch points here, touch points here, touch points over here. And right now, our wick on this particular candle today has hit almost precisely the bottom of that wedge. All right, I'm going to circle that so you can see where we're at, because that wedge is overshadowing right there. We hit that bottom of that wedge. In addition to that, let me jump to the CME futures chart. And I spoke about this in yesterday's video as well. I've already got it circled here because I just did a video and I was all on mute. I mean, it was perfect. Perfect video. Probably the best I've ever done. I say that every time I'm on mute, but anyways, whatever. All right, so this gap over here, we know this was formed in May, 29th of May. All right. So we know that 90 to 95% of all gaps are filled sooner rather than later, but they are eventually filled over 90% of the time. And again, sooner rather than later. So here was our gap, and right here, I'll circle it again, is where we filled the gap. That's where we are today. All right. So that, compare this with our Bitcoin chart. The bottom of the wedge, we filled that gap. All right, that is another indicator, guys, that the market is reaching a bottom. Now, I'm not going to go out and say we're going to go straight up now. No, that's not the case. Although I do see a gap on the CME futures. Let's just jump there real quick since I'm talking about it at 36,000, and I believe this one was on the daily. Yes, there it is. All right, see the gap right here. So that is my prediction as to where we go within the next week or two. All right. Now, Does that mean we're going all bullish again? No, we're still in a bear market, guys. I'm not saying that at all. Please don't misconstrue what I'm trying to tell you. I am just saying that overall, I expect upwards movement over as the priority over downwards movement. All right. And I just wanted to simply make you all aware. Now, it could be sideways movement even. Either sideways movement or upwards movement would be predominantly expected. So we could continue this range bound activity here between 29 and 30,000. It could be boring, but a lot of times in these descending wedges, you do go sideways. We can see that, and we saw that yesterday in all of our altcoin charts, right? Let's see, next trade. All right. So I was talking about, oh gods, we saw this. See how you went across here for several days before you popped up. GTC, same thing. You went across, straight across. See this? Range bound, all the way across that descending wedge, that longer trending descending wedge. See that? All the way straight across. So what I'm saying is that can happen here on Bitcoin too. All right. You can just trend sideways. We can remain range bound in this longer trending descending wedge all the way, guys, believe it or not, all the way to the end of July. That's a long time, a lot of boring price action. But the reason I wanted to bring you this video mainly is just, guys, when the retailers all start to go short, that's when the market movers, institutional investors jump in and they take this market long and they leave you holding the bag. They steal all our cash, all right? So I'm not trying to persuade you to go long. I'm not trying to tell you not to go short. I'm just pointing this out more as a cautionary, a warning, all right? A cautionary tale. Put in those stops if you are going short. Put them in fairly tight because from what I'm seeing with all the indicators that I'm seeing, the priority really remains upward to sideways price action versus down. And so I just wanted to give you that warning real quick. And then those of you who are of the sentiment that we're going to go up sooner rather than later, you can put in those longs, but also be careful because we're in bearish territory. All right. Anything under this black ascending trend line, said it all along. I'll say it again for the new people. This is bearish territory. So again, tight stops down here are necessary if you want to preserve your capital. Okay, so more indicators are showing me a move up, and we'll call it a bounce for now because it's not a trend reversal yet. Maybe coming sooner than later. So just be ready for that and be careful in your trades. With that being said, you guys have a great weekend. Peace, y'all. Talk to you in the next video.